This podcast is brought to you by Ginsler Wealth. The information discussed today is meant to be general in nature and not tailored to your specific investing circumstances. This means that you should talk to your regular Ginsler Wealth advisor or your own advisor before acting on any information we discuss today. Nothing in this podcast is intended to be a solicitation, and past performance does not guarantee future returns. We are recording this podcast in mid-March with continuing threats and implementation of Trump tariffs. But please note that this podcast will not provide guidance or advice on what to do in the face of these tariffs. Today on the Unlimited Podcast, we speak with wealth management legend Gerry Sheff. We talk about how being an architect led to the formation of Gluskin Sheff, building a differentiated company, and the importance of luck and timing to one's success. Let's go! Welcome, everyone, to another episode of the Unlimited Podcast. Maybe you can hear it in my voice. I am very excited about our guest today. I've been hounding this gentleman and mentor of mine for a little while, and we've got him on. This is Gerry Sheff, one of my former bosses, founder of Gluskin Sheff, and I would say certainly falls into the category of our, let's call it Lessons with Legends series on the Unlimited Podcast. So Gerry, really thankful and pleased that we're going to be chatting today, and thank you for joining.
My pleasure.
So let me give a quick intro to you. Maybe I'll give a quick intro of me meeting Gerry. I went into Gluskin Sheff's offices in probably very early, somewhere around 2006. And I met with Ira, and I said, I'd love to speak with Gerry and see if there's an opportunity, and went to Gerry's office, sat down with Gerry and Jeremy Friedman, who later became the CEO of Gluskin Sheff. And I could sense right away, right from the beginning, Gerry doesn't, mess around, very direct questions, very straight talker, and sort of learned a lot from Gerry in the way he interacts and deals with people. So I had the pleasure of working with Gerry for 5 years and in touch with him for much longer. Gerry is a graduate of the School of Architecture at McGill University, which was in 1964, and he received his MBA from Harvard Business School in 1971. Following this, he joined Cadillac Developments in Toronto, which later became Cadillac Fairview, where he played a number of key roles with that firm. And then in 1984, famously, I guess, he left, and with his partner Ira Gluskin, former podcast guest, I founded Gluskin Sheff, which went on to become one of the most successful investment firms in Canada, or as Gluskin's mission statement says, the pre-eminent wealth management firm in Canada, serving high net worth investors. And probably in my career, there was, aside from starting my own firm, there was few opportunities where I was as excited to join a firm and get a business card as I was when I joined Gluskin Sheff. So again, Gerry, thanks for joining, and we'll dive into a few questions here.
Fire away.
So, I've given a very short bio that doesn't do you justice at all. Maybe you can just give a little bit of background, where you grew up, how you got or decided you were going to do an architecture degree, and a little bit of your path to where you are today or Gluskin Sheff. And I'll definitely interject with a few questions along the way here.
Sure. I was born in Montreal. I grew up in Montreal in the later years in the Plateau area, if you like, which was Mordecai-Richler territory at the time. And grew up in a family of fairly modest means, the eldest of 4 children. And the primary objective at the time was to develop a profession. And the typical professions were doctor, lawyer, accountant, none of which I wanted to be. So by default, I didn't know anything about architecture. I thought, well, it's something I don't know anything about, so I didn't know I didn't want to be one. So I thought, well, maybe I'll become one.
Right.
So somehow or other, I ended up being a student at McGill University in architecture. It wasn't through any great passion of mine or any great love of, or at least not that I was aware of at the time, or any great talent. And architecture at the time was a 6-year course at McGill. And I knew even when I was in it, by the time I was in grade 3 or year 3 or 4 of my 6-year adventure there, I, I knew it didn't feel like really what I wanted to do when I was in, and I'm a finisher. So
Right.
I stuck it through with some difficulty, and I can't say it was enjoyable. Or I've said this before. I can't say it was enjoyable, but I did finish, and I did become an architect. And then when I moved over to England, and I worked for a very famous architect, Sir Basil Spence, who accidentally was commissioned to design the British Pavilion in Montreal while I was living in England. And since I was from Montreal, they thought I knew something, and I didn't tell them I didn't. So I became involved in the project, and ultimately I was invited to go back to be the liaison between the Montreal development of the project, the building of the project, and what happened in London, England. So I was there before Expo and sometime after Expo. And actually that was a very exciting period of time to be in Montreal. Expo was amazing. And being involved in the British Pavilion was very exciting. And for a moment I had a thought that maybe architecture, maybe I can make it work in some fashion, because it was a very exciting time, and it was very heady being involved in the way I was. But after Expo, Montreal, went off the edge of a cliff for a variety of reasons. First of all, Expo was an artificial high. Quebec separatism was rearing its head again, and there was probably a natural recession anyway. And so, it was a wake up call at a moment in the sun here, but the sun was setting pretty rapidly.
Hmm.
And so I struggled for a while and had a midlife crisis trying to figure out what was I going to do with my life, because clearly, architects is a very tough living, and I know a lot of architects. I know a lot of successful architects, and some of and the most successful ones obviously do well, but the vast it's a highly underpaid profession compared to many other professions. And I was interested in providing wealth for me and my family, and I definitely aspired to make money. To put it in crass terms, I was highly motivated by making money, and clearly, architecture was not going to be a vehicle to doing that. And I had a need to reinvent myself, so I somehow or other got into the Harvard Business School, and that's a whole other story. But I believe I know I'm the first architect in Canada to ever go to the Harvard Business School. And I was worried about it, but worried about whether I'd be able to be competitive, and and so on, given the reputation of the place, and the difficulty of getting in, and the caliber of students that apply, etc. But I had a very good experience there, and I realized that my thinking was as good as anybody else's in any area that I chose to think. And and you don't have to have an opinion on everything. You can be quite silent and say, "I don't know," okay, or "I have no opinion." But where I had an opinion, I always felt in that competitive environment, mine was as good as anybody else's. And I did well in school for the first time in my life. Actually, I did well because I was a very mediocre student. The rest of the time, being more interested in billiards and other things.
Right. And then after HBS, you went into the real estate world, I guess?
I did. So by this time, I started out having a family quite early. So by this time, my first child was born in London, England, where I lived there. The second child was born during Expo, and I lived in Montreal. And my third child came along in Boston when I lived there.
Right.
So 3 different countries, 3 different cities, very complicated. And, so I wasn't traveling solo at that time. So I had a lot of considerations, and we wanted to come back to Canada. There were a lot of reasons not to stay in the U.S. at the time. It was the peak of the Vietnam War activities and all kinds of demonstrations then about the Vietnam War, unrest on campuses and so on, Kent State
Yeah.
period, unrest on Harvard's campus. Then, as there has been more
Yeah.
recently.
Yeah.
And so we decided to come back to Canada, but I didn't want to go back to Quebec because Quebec, clearly was not ascending. Okay, and there were the future for English-speaking people was not going to be in Quebec at the time.
Yeah.
So Toronto was a natural place to go. It's close to Montreal. We have a lot of family in Montreal. Toronto, had a strong Jewish community, which was important to me in terms of, from raising my children and so on. And I had a very small number of relatives here, but I had some contact with the city. I didn't really know it. And I basically married my architectural background with my business school training. And that became, that gave me the opportunity to join a company like Cadillac at the time, which I didn't know anything about. But like many things in life, some of the best things that happen are just luck. But you have to take it when it comes, but you have to have the luck cross your path. And I knew when I came up for an interview back in, I guess it would have been 1971, probably December of 70, when I finished Harvard in 71. December of 70, I came up and I met with Eve Diamond, who was the head of Cadillac at the time, which I didn't know anything about. I thought Cadillac is probably any company, anybody who would call themselves Cadillac is probably a Chevrolet. Aspiring to be a Cadillac, it's probably a schlocky company.
Right.
But and it was a small public company at the time, but I met Eve Diamond and I met a guy named Gerry Sheff, who's still a friend of mine to this day. And these guys were incredibly impressive. And I knew after the first interview that my life had changed. And if they were going to make me an offer, which I felt they would after the first interview, that I was definitely going to take it. And they did, and I did. And then, that company grew very successfully and ultimately merged with, 2 other public real estate companies. One was Fairview Corporation, which was the real estate arm of the Bronfman family interest, Kemp, CEMP. And the third was a company called Canadian Equity and Development Corporation, which was a company that was originally E.P. Taylor's public real estate company that developed all of Don Mills. And those 3 companies merged to become Cadillac Fairview. Again, another story, one book written on this. And I had a terrific 13-year career there, very enjoyable.
What were you specifically doing there?
Well, my first job was I was working with Gerry Sheff as his executive assistant, but very quickly, I assumed a lot of responsibility. We were developing the Erin Mills project, which was a massive new community in Mississauga, which there's tens of thousands of hundreds of thousands of people probably living in Erin Mills today.
Yeah.
So I was around when the first house was built, right from inception. And it was it was one of the larger planned communities in Canada at the time. So I was able to marry my architectural background, with my business experience.
Yeah.
And whenever I was unhappy at Cadillac and Fairview merged in 74 with Canadian Equity, and we had a large architectural department, or a half floor of people, because we were very active across all areas of real estate. Whenever I was unhappy at my job or had a down moment, all I had to do to feel better was to walk through the architectural department and look around at all those people over their traffic boards and saying, what have you got to be unhappy about? Look at these guys.
Right. Oh my gosh. Unbelievable. Okay. And then somehow you and Ira, your business partner of decades now, connected, cross paths. Tell me the story
Again,
of Ira and how that evolved to, your namesake firm.
okay, well, that was, again, like all things in life, that was accident, luck, call it what you want. But very shortly after I arrived in Toronto, again, I worked for a company where the principals I was working with gave me extraordinary exposure. And I'd say very, very quickly, I met Ira, who came into the office. Uh, Ira at the time was a budding real estate. He decided to become a real estate securities analyst.
Right.
And I think the reason he decided to become that is because there were no real estate securities analysts. So he thought he'd have no competition.
Smart guy. Smart guy.
So he followed the very, what started known as a limited number of real estate companies. He dabbled a little bit in retail as well. But, with the passage of time, there was Cadillac, there was Fairview, there was New West, there was Dale, and there was Karma, and there was Branalia, and there was Genstar. As he became Ira, as you know, and as I've said many times, is as I joked many times, not having any particular talent, decided to become a character. And he was very successful. He has become a character, although he also has a lot of talent. And so he became the guy in the real estate business, and he followed our company, and we became friends. And I was always interested in the stock market, even before I was at business school, before I studied architecture. I never had any money, but I dabbled. I knew how to buy and sell a stock through a broker. And Ira was an institutional analyst, an institutional broker, if you like, at Brown, Baldwin, and Nisker at the time.
Yeah.
And he became my principal, the principal guy I dealt with. And because I was an insider at Cadillac Fairview, I obviously couldn't buy or sell those shares, but I could buy or sell other real estate securities, which I did. Timing is everything, but at the time, I became very friendly with Ira, and was always interested in what he was thinking, and made some what were relatively significant and consequential investments at the time based on his advice that turned out to be very successful. And there is a huge element of luck in that, but I also took what were risks that I probably shouldn't have taken, because but I had nothing to lose in a sense, other than I had a very good job and a decent income. I had no capital, so I would borrow money to take risks, which is not necessarily the smartest thing to do. But again, with hindsight, luck, it paid off.
Yeah.
And so we were close over many, many years, and then as my career at Cadillac Fairview was coming to an end, and I won't bore you with all the details there, but I had a very successful career there. The company went through various changes, and then in 1984, by that time, 1981, 82, there was a huge recession in real estate companies. Interest rates were 18-20%, which is it's almost like a death sentence for real estate companies.
Yeah.
And so on. So all of them were under pressure, and all of them were taking dramatic actions of various kinds to right the ship. And Cadillac made a decision on my recommendation that not that other people were not thinking it, but it was a very tough thing to do at the time, to get out of the land and housing business. Okay, and which we did, and I was charged with doing that. So I knew about 2 or 2.5 years before I left that I was going to be leaving.
Right.
And I started to think about what I was going to do. And much to my, and Ira was one of the people I was speaking with. And much to my surprise, I discovered he was not happy where he was. And
Mm.
not that I never approached him and asked him to do anything, because it never occurred to me that he was unhappy in his situation at Brown Baldwin.
Yeah.
And we had a false start at the beginning, because the conversation went like, "Would you consider doing anything with me?" I said, "Well, if I didn't know you were unhappy, but if you would leave Brown Baldwin Nisker, you know, we could go into the money management business. If you would manage the money, I can run the business and
Right.
get the money." So
Yeah.
whatever. That was the concept. So he went back and told them that he was going to leave, and they then said, "We don't want you to leave," and made him president. So
Right.
he didn't leave, and I wasn't ready to leave anyway. This was a longer term plan.
Yeah.
And then I don't know, a year later, we had another conversation, and it turns out he wasn't happy to be president of Brown Baldwin District.
Right.
And would I still consider doing something with him? And I said, sure, I would, but now I was getting close to the end. It had to be real, and it turned out to be real. And we developed this concept, and we developed this concept of the Gluskin Sheff Fund, $1 million chit. Very, that was a lot of money at the time. It's still a lot of money, but it was a huge amount of money in 1983, 84.
Yeah.
And so basically, if you couldn't write a check for $1 million, we didn't have the time to talk to you, because those were the only investors we were interested in. So
Right.
obviously, we had to speak to people who had a lot more than $1 million. If they were to consider giving us $1 million. And that was sort of the genesis. And now, who are you going to go to? You're not going to go to strangers. So the people we knew were all in the real estate business.
Yeah.
And notwithstanding the business was in trouble, the real estate business was under pressure. Many of the people had lots of assets, and they themselves were, perhaps because of what was happening in real estate, looking to diversify themselves.
Yeah.
So we created this structure where we basically said, if you give us $1 million, you're not even locked in. You can take your money back. It's all liquid. We're only investing in publicly traded securities. There was, to some degree, a real estate bent at the time, because they thought that's what we knew something about, Ira in particular, who was investing the money. Although I'd say very quickly after we started to move away from real estate into other areas. And, we were lucky enough to have a very great start, great results, which obviously it's a huge help to have great results out of the gate.
Yeah.
We did, and then people started giving us more money. And then, of course, in 87, the market crashed in October of 87. So, again, we were lucky. Lucky, and again, lucky's a theme here.
Yeah. I'm hearing that luck and timing.
In 87, when the world was going down the drain, literally just a few days before October of 87, we had sold half our securities. So don't ask me why we did that. We never did anything like that before or since. But for whatever reason, we did that then, which was a brilliant move at the time. Although, the unbrilliant move was that we didn't jump back in immediately, because the market rebounded very quickly. So we didn't catch the downdraft, but we didn't catch the updraft either.
Yeah. Hard to time the markets, no
There you
matter
go.
what.
You can't time the markets.
Yeah. Yeah. The firm obviously grew, was a huge success, but right out of the gate, and I was much younger at the time, but still sort of, knew of the firm and watching, especially as I went through university and all this sort of stuff. But it seemed like a different approach than maybe some of the other wealth management or fund management firms, an irreverent way of communicating, this new performance fee sort of fee structure, which I think was maybe never used before in the country, or at least on these types of funds. Like, how did you decide what actions you were going to take to, maybe it was intentional, maybe it wasn't, but it was certainly a different firm than a lot of others out there.
No, there's no question. And I think, I think, I mean, we decided to be a boutique, a very, very boutique firm, and to differentiate ourselves from, from all the big sort of vanilla money management operations that existed at the time. So we differentiated ourselves in a variety of ways. One of which is we were the first company in Canada to ever have a performance fee in managing money. And no, participation fees were not that uncommon in real estate, in joint real estate joint ventures. So we viewed this as the better we do for you, the better we'll do for ourselves.
Right.
So we created this performance fee, and people accepted it, and our results in the initial couple of years until October of '87 were terrific, and they enabled us to gave us a great boost on the start, and how you start a race has an effect. Now we also, because of the unique relationship between Ira and I, where basically he was managing the money, I was doing everything else. Not that we didn't have a close collaboration and bounce things off each other. But my job was to create sort of a cachet of the company.
Right.
And partly because of my architectural background, I had a very strong, more than partly, I'd say I had a very strong interest in design, in communication, in non-written communication, in terms of presentation, and so on. So we always try to differentiate ourselves. Very high minimums, a high standard of graphic design of any communication with clients, noticeably different. So when it crossed your desk, it wasn't just, the Royal Trust coming across, or National Bank, or National Trust, or whatever. It was like, who is this? It was more like, their names. Okay? You name it, or Louis Vuitton, okay? Back then, okay? So, and then you have to have the results as well. And well, we created a certain cachet, and we did it with our offices. We had, when we were able to move into our first real offices, if you like, we had an architectural competition for the design. Bruce Crowbara of KPMB ended up doing them. Our offices were exceptional by any standard. Okay, and we had the second highest floor in BCE Place at the time. The only people who had a floor above us were BCE, because it was BCE Place.
Right. Yeah.
And in fact, it's because of our offices, and Guevara ended up doing the Goldman Sachs' head offices in New York, because Goldman Sachs came up to see our offices. I mean, Goldman Sachs coming to see Gluskin Sheff's offices tells you there was something to see.
Yeah.
Okay.
Sure.
So, we established a standard.
Yeah, amazing. Yeah, look, I spent a little bit of time in those offices, and then you and I together, with the help of KPMB and others, built the newer Gluskin Sheff offices.
Yeah. Well, by the time we built the newer Gluskin Sheff offices, again, it was a KPMB thing, but I was already sort of on my way out of the company, sort of at least being CEO.
Yeah.
And we were taking a lot more space. We were 2 stories. And so I wasn't driving that at the time.
Yeah.
And I would say, I had very little to do with it, other than KPMB were also the architects. But they were not of the same standard as the very first thing we did, which was the first full floor at BCE Place.
Right.
The second place was 2 floors at the Bay Adelaide Center.
Yeah.
And they were exceptional. Don't get me wrong. But we probably spent as much on the one floor as we spent on the 2 floors 10 years later, or whatever it was.
Right. Amazing. So maybe talk a little bit more about, your relationship with Ira, or your partnership with Ira, because, I mean, this is a partnership that's gone on now, for 40 plus years, probably more?
Yeah. I mean, we have, yeah, it's, 84. I mean, I met Ira in 71. So what's that, 29 and 25? It's a long time. It's
Yeah.
54-year relationship.
Yeah.
And we've been in business for what is it, 84 to 24. So that's 40 years.
40 years.
So
So-
40 years since we started. No, and we still share an office today. And, we have a common family office.
So what's the secret to the success of this partnership? Because I often, talk to folks about you and Ira as, an example of a spectacular business partnership. Um, you know, how'd you do it?
Well, I think again, there's always an element of luck. Okay. And you take it when it comes your
Yeah.
way.
Yeah.
But I would say, I have no idea. You had a discussion with Ira, I know, on another podcast. I don't remember what he said. I probably listened to it, but I would say, I would say, trust is the most important thing. Okay. Like, and, we've been 50-50 from day one, and there has been complete trust. Okay. And Ira has joked about this. He has actually said this. He's right. He says he's honest, I think.
Right.
But but it's he and stay in your own lane. And so he has stayed in his lane of investing, and he doesn't come into my lane unless I ask for his opinion. And most of the time, he's quite reluctant to even
Right.
express it. But if he does, I take into consideration, obviously, and vice versa. I mean, I stay out of his lane, he stays out of my lane. And it's interesting, Gluskin Sheff we were there for a long time, and the company went public, and we had, publicly reported financial statements. But in all the years we were a private company, and even when we were a public company, I mean, Ira, who spent his life analyzing financial statements, I don't think ever looked at a Gluskin Sheff financial statement. Okay, that was my department. That
Right.
was not his department. So
Right.
he just assumed it was all being looked after.
Right.
And it was.
Amazing. So you talked about that now you run a family office, or collectively you and I are together. So what's been the change from running a wealth management firm to managing other people's money to now your family office where you're focused on your own and I guess your family's? What's the philosophy? What's the approach? Has something changed in the way you think about managing assets?
Well, lots of things have changed, of course. I mean, so first of all, Ira and I actually, don't really run the family office. A young man by the name of Jamie Grunman
Sure. Yeah.
runs the family office.
Very smart guy. Very
And
smart.
Jamie
And I'm sure he's going to hear us this on the podcast. Very smart guy. Okay.
You probably will. But Jamie is an exceptional young man, in my opinion.
Yeah.
And he's got, and actually Jamie, I won't go into the whole history of Jamie, but Ira invented Jamie while he was still at Gluskin Sheff. While Ira was still at Gluskin Sheff. Jamie never worked for Gluskin Sheff.
Right.
But Jamie reached out to Ira. Ira became friendly with Jamie. Jamie was eager to learn whatever he can learn from Ira. And so and Ira would invite him to a lot of meetings, and Jamie was be hanging around. Nobody knew who Jamie was or what he was doing. I was very curious. So when we were leaving, when Ira were finally leaving Gluskin Sheff to move into our own offices, Ira suggested that I didn't really know Jamie. Ira suggested this guy, would probably be ready to leave the bank. I think at the time he was CIBC, if I'm not mistaken. But you should talk to him. We need him, or we can use him, or be an advantage, or whatever. And I have to say, I was reluctant. Okay, I was reluctant, but I spent some time with Jamie, and I was very impressed. And we did bring Jamie on, and now it's 8, 9, 10 years later, and Janie is, basically the backbone of the office, and he's got a couple of things going for him. He's young, which is a huge advantage in life,
Hmm.
and he is very mature, and he's got good judgment, and he's wise beyond his years. Those are his, yeah, and he's trustworthy.
Yeah. And so,
I,
and so
I,
how do you
he's
guys
trustworthy.
think?
He's trustworthy, I think.
So how do you guys think about investing your wealth now? You could go, if you didn't have Jamie, you didn't have your family office, you can come to us and we can help you look after everything, as you know. But you could go to many other firms. You can invest in public, private, real estate,
Yeah.
alternative, all this business. Do you have a philosophy and an approach now, having been on the other side for run the firm, Gluskin Sheff
Well, I
for
do. I
20
do.
plus years?
Again, I have a philosophy. Ira has a philosophy. We don't have the same philosophy
Okay.
necessarily. We do many of the same things, but we do a lot of things that are different. Ira has a much higher proportion and a much broader diversity of private investments of one kind or another. I personally always had a bias in favor of public investing. Not that I change my mind that often, but I like the idea of being able to sell your shares or liquefy your investment
Yeah.
without having a conversation with a lawyer or a joint venture partner to get in or out of.
Yeah.
Okay, the ability to just pick up the phone and say, sell it.
Yeah.
Okay, well, it's up a dollar, down a dollar is less important than when you want to get out of something private. It's often the wrong time. There's all kinds of complexities,
Yeah.
but it is what it is. But I have very few private investments, and I'd say I'm inclined to have fewer and fewer going forward. Because of my age and estate planning, I'm a huge believer in leaving a tidy, carefree estate that can be wound up and dealt with in an orderly way. And public securities are the greatest way of doing that. And private investments are, let's say, more challenging. Okay.
Okay. Got it.
They just require a lot of ongoing custodianship to
Yeah.
deal with. We have three things we do. First of all, we deal with a variety of money managers, both in Canada and the United States. And not many, but again, I deal with probably fewer than Ira deals with. I tend to be quite concentrated. We have, in Ira's case, more private investments. In my case, very, very few, some in real estate. And we manage, I think we being Jamie, it started out being Ira. It still is Ira to some degree, but, Jamie and or Ira and or Jamie, we manage some money for ourselves, okay, in concentrated, secure, fairly concentrated portfolio, a very limited number of names. And there's not much I do, to a degree. I mean, I'm one of the huge advantages of having your own office and having no clients other than yourself. You don't have to account to anybody.
Right.
Okay, no matter, the market could have a heart attack, okay, so you don't feel very good about it, but the phone's not ringing
Right.
because you can't call yourself.
Right.
But we've been very fortunate, and things are going well, and I'm a pretty happy guy.
Okay.
But the only call that I've made, just again, it's a lucky call, okay? Because I'm at the stage of life that I'm at, because I don't believe in having debt. I believe the only people who should borrow money are people who have no money. If you have money, you shouldn't borrow money.
Right.
So the one call I made that's turned out to be accidentally, again, it's an accidental call, is I got probably 25% of my portfolio has been in gold of one kind or another. The precious metals, gold and silver of one kind or another. And clearly that's been a great place to be through this period. And the other call, probably more as our office than mine, more Jamie, is, predominantly, my investments have been predominantly U.S. dollar denominated, and that's been the right place to be. It may not be the right place to be for the next period of time, but it's something we're thinking about.
Yeah. Well, yeah, we'll talk about the state of the world in a second. For a moment, circle back to the architecture thing, because the theme I'm hearing from you right from the beginning was it wasn't really what you wanted to do, and I think you even said in an interview you don't even think you were a good architect. Since I've known you, I mean, it's really to me been a part of your character, as you say, the offices, the stationery, the look and feel at your homes, your cottage, etc. Like it's everything you've done is at such a high standard, and in particular with this touch of architecture, art, etc. So, and it sounds like that actually, it's sort of like Steve Jobs and his, knowledge of calligraphy was what helped design Apple's design and fonts and all this stuff. Like there's something there. Maybe for fun, I know at your cottage you have this, famous treehouse, and there was a big contest you had to have architecture design the treehouse. Is that a story you can share with us? Like, it just seems pretty interesting.
Well, I mean, I can, but if I can, just talk about a little more background on the architecture side. So, I mean, again, I believe I have developed a great appreciation for architecture, for great architecture, and in particular for architectural talent. There's a huge difference between being, appreciating art and being able to produce art.
Yeah,
Okay,
yeah.
so
Sure.
I appreciate architecture, but I can't produce great architecture. But I've been fortunate, because of my financial success, basically, that I can indulge myself in working with very, very talented people. So we had a home in Toronto, in Rosedale, that we had an architectural competition on to, and Bruce Colbara, the guy who did our offices, the offices were long finished by that time, did our home. That was a very architecturally consequential home. And then Sutcliffe and Associates, who are, have an international reputation. They've done work, around the world, but not a lot of work, but very significant work, and a lot of it in the housing area or in single modest building area. Like they don't do big high-rise office or apartment buildings. And they are exceptional by, I'd say, on a world standard. They've won dozens of Governor General's award for their work. I mean, almost by definition, everything they do is award winning. So they end up, they were one of the competitors on our house in Toronto, and were not successful at the time because I didn't think they'd had enough. They had enough experience to do something of the scale. So they ended up doing, as a consolation prize, I say, a boathouse we did at our cottage property in Muskoka, and that turned into a 25-year relationship where they've done several, 3 other buildings on the property, plus all the landscaping and the production of a book on our whole journey, et cetera, et
I
cetera.
have it. I love
Yeah.
it.
And so and we're currently engaged with them on an apartment that we're renovating here in Toronto, which is a storied apartment that has had some Philip Johnson connection in the past, and was owned by a guy by the name of Noah Torno. It's a whole story in and of itself.
Mm.
And now the Treehouse story is just that I'll pick it up, but so the point I'm making is I've had a lot of architectural involvement over the years. I've been a director for many years of the Canadian Centre for Architecture in Montreal. But I've been engaged in architectural things, okay, and I love architecture and love when we travel to go visit architecture, etc. And have a great appreciation. Read lots of books on architecture, lots of books on architects, and so on. And I've had the privilege of meeting and getting to know, some very, very talented people. So along the way at the cottage, somewhere in there, a treehouse seemed like you know, a bit of a folly. And so we engaged with the University of Toronto and sponsored a competition with the School of Architecture over the course of a weekend where any students and any individually or in combinations could compete. And we had a jury. I was not on the jury. My wife was, and some university professors were. And we had a site at the cottage in the forest. And the idea was that the winning entry, the student would have the opportunity of coming up to Muskoka for the summer and working with a local contractor to build the treehouse that was the winner.
Yeah.
And that's what happened. And the young man who won the competition, the name escapes me at the moment, or that's unfortunate. But anyway, but he ended up going on. He ended up working for Frank Gehry after he graduated, and ended up working in Hong Kong. I think he's originally from Poland, and now he's in Calgary. And so he came up and lived at the property for the summer. And there's this amazing 3-story treehouse that has been published all around the world.
Wow.
Literally, it's probably been published in 25 countries. And now, unfortunately, we've allowed it to become a little bit derelict, and all these things require a tremendous amount of maintenance because the trees grow and they move,
Yeah.
and this treehouse needs some life and attention. And
Time for another contest, maybe.
we'll get to it. We'll get to it.
So, I mean, and that's a nice way of bringing in students, or put it in the category of giving back and supporting young minds, etc. Obviously, you've had a lot of success. You've talked about some of that over the last almost hour here. But there's a huge giving back element to what you and Shanifa do collectively. At CAMH, where you have an emergency department in your name, at the Sheff family building at the Sherman campus, at JCC on Bathurst. What's been your philosophy around giving back and charity, and what's the legacy you want to leave? I know your family and your children are very involved as well. How do you think about that?
Well, I think philanthropy, and it's a highfalutin word, but I think it's a huge privilege to be in a position to be able to support community in a whole variety of ways, and to be able to contribute to to assisting in the support of others in whether it's in health, or whether it's in social services, whether it's in schools, hospitals, education, whatever. Okay, and we are very privileged that we can do that. And my wife and I are on the same wavelength. We somehow or other we both got it from. Again, you have to be lucky. You have to grow up in families where those values are present, and you have to be in a position where you can do it, and you have to want to do it, and you have to become comfortable with it.
Yeah.
And so, we're in that stage where we have been for a while, where we're been fortunate to be able to do it. And I hope to be able to do it as long as I'm around.
Okay, good. So, one thing that I remember, I'm sort of shifting the conversation a little bit here, and I know we're getting a little bit. I'm taking a lot of your time, so we'll shift.
I've got nothing to do.
Okay, good. Good. Then I'm going to slow down. One of the things I remember most about working with you, whether you know it or not, was, you had this phrase that you used a lot as we went through, decisions and challenges and, strategy and whatever at Gluskin Sheff. And it was upgrade my thinking. And it allowed you to basically change your mind, or chart a different course. You'd say, I've upgraded my thinking and we're going to do this or that. And basically was a way for you to graciously, give someone some credit for coming up with a good idea, maybe not the same idea as yours, and then moving forward and, hopefully achieving the right objective there. Can you? I don't know if that even resonates or is something that you think about or do consciously, but it certainly stuck with me as someone who worked for you. How did that come about? How's that sort of philosophy come about? Or maybe more specifically, if that wasn't sort of a conscious effort, any examples of how you sort of upgraded your thinking, changed your mind that you think had a meaningful impact on a direction of something you took?
Well, I mean, I don't know that I can come up with an example at the moment. Something would come up while we speak, but I think intelligent people should be open to changing their mind. I mean, if you can't change your mind, I mean, it means by definition you're not thinking.
Right.
Because I mean, the things are changing. New information is coming in. People are talking to you. You don't have all the information. You always have to be open to upgrading your thinking. Right? That doesn't mean you don't have an opinion, but your opinion, or that you don't have a thought.
Yeah.
But you should always be capable of modifying your thought, changing your thought, reversing on an 80 degrees. Now, I don't mean doing this on a Trumpian level.
Right.
Okay, where no thought is permanent for more than 60 seconds,
Correct.
and
Yeah.
you're bouncing around all over the place, which is, to me, that's not thinking. That's something different. That's
Right.
you know, that's a whole other different process. But I think anytime you get whatever the issue is, you should be, you got to have it doesn't, you can have a very strong point of view, but you should always have an open mind
Right.
to, if somebody says something that says, well, you've got a strong point of view, but have you thought about this? Have you thought about that? Have you, okay, or you're wrong. You're dead wrong. Okay. And here's why you're wrong.
Right.
You know what? You're right. I am wrong. Okay.
Right. Well, I would like to see Trump maybe upgrade his
Yeah.
thinking on some of the actions he's taking, tariffs and otherwise. So actually, that's a good question for you as well. I'm absolutely not going to ask you what is the prediction for what's going to happen, this and that, because day to day.
You can ask me, but I don't know.
No, you don't know, I don't know, and nobody knows, to be honest. But what I do know is you've lived through lots of this stuff. You've managed through, you've been responsible for other people's money and wealth for many decades. Based on your past experience of seeing, lots of volatility, uncertainty, leaders making decisions, however they make them, what's your best advice for folks to do? What are you doing right now? And maybe what's your best advice to folks, what they should be doing as they think about, let's say, the wealth management side, but maybe
Yeah.
anything, any advice you have?
Well, I mean, I think doing nothing is often the best thing to do.
Right.
Yeah, because if you do something, you have to do it right twice. It's like it gets back to the story. It's like it's the market timing story we discussed originally in terms of October of '87. It's like trying to be a smart guy or a woman to say, okay, well, I better get out because there's a tariff problem. I'll get out. Well, first of all, you don't know that the market's going down. Okay, that you don't know that it may not already be priced into the market, but you got to make two decisions. You have to know when to get back in.
Yeah.
Okay, and if you make the decision to get out, which could be a bad decision in terms of timing, you're never going to get out at the bottom. It may go lower than where you get out, but now it's on its way up. Do I jump back in now? I mean, it's impossible.
Right.
It's impossible to know what to do on a macroeconomic level, coming in and going out. So just ignoring the noise.
Get a
Ignore the
plan in
noise.
place and,
Ignore the noise. No. Again, I don't think people should be borrowing money to invest in the stock market. Okay? I
right.
think if you're leveraged, that's another story. But if it's long-term capital and it's invested in the right way, everything will be okay in the long term. Or if it's not, it won't matter what you did anyway.
Okay, so I'm gonna ask you one more question, and we asked all our guests this. And you've given again back to the theme of architecture. You thought you were going to do that, then you realized you didn't like it. Then you ran a very successful money management firm, etc. But you may know our theme over here at Ginsler Wealth is Your Wealth Unlimited. The name of the podcast is Unlimited. And so we ask our guests all the time, think of the world as being unlimited. You could have done anything, you could do anything. If you weren't an architect, if you weren't the CEO of Gluskin Sheff, if you could do anything in the world you wanted to do, either back then, now, whatever, the options are unlimited. What would you have done, or what would you be doing?
I'm very happy doing exactly what I'm doing. And I'm very fortunate because I look back at I'm looking back at it from the vantage point of somebody who's almost 85.
Yeah.
And and I say it's the sum total of everything that preceded where I am at this moment that put me in the place I'm in. So if I'm okay where I am,
Yeah.
everything that preceded it brought me here. The good, the bad, the ugly.
Yeah. Yeah.
So if any of it would have been different, this would be different right here and now.
Yeah.
So it's just the way it is. I'm not big on sort of analyzing or losing any sleep over the would-haves, could-haves, or should-haves of my life. Okay,
Yeah.
it's taken the path that it's taken, and I'm in a very good place now. It was a generality, and if I'm in a good place now, everything that came before brought me to this good place. The good, the bad, and the ugly.
That's a beautiful summary, and we'll leave it at that. So listen, Gerry, once again, thank you so much. First of all, for the mentorship over the years and the time we spent directly together day to day at Gluskin Sheff, and your time and support of me ever since. And thank you so much for joining us today and sharing your story and your wisdom.
Brian, it's a pleasure, and thank you for including me in this adventure. You said, I think you said off camera at the beginning, this is the 51st or 52nd of these podcasts.
Yeah.
And I'm sorry it's taken me so long to agree to do this, because it was a very pleasant experience.
Very good. Okay, wish you all the best, and we will talk to you soon.
Okay, thanks, Brian. Good night. Bye-bye.
The Unlimited podcast is hosted and produced by Brian Ginsler and is edited and mixed by myself, David McMillan. This podcast is not to be taken as investment advice. If you like what you heard, don't forget to rate the podcast and follow us on social media at Ginsler Wealth. Thanks for listening, and see you next time.
That's yours, I think.
That's Ira. That is Ira Gluskin calling me right now, and I just declined the call. I could have patched him in, actually, and that
would have been great.
That would have been a bit of a hoot. But anyway, I just declined out his call.